Let me just throw up these probability calculations of who will move by 50 basis points this month. This is market implied odds percentage. So when it comes to the ECB, it's pretty much a done deal. 99.23 probability that they go 50 basis points. The Fed is now a 2/3 chance, so just under 70% that they go by that much. And the BOE, there's virtually no chance at all that it does that much at its next meeting. So when you take a look at this, does this tell you that the markets, traders, investment participants have adequately, finally priced in, processed, internalised what the Fed and other central banks have been messaging?
Well, I think so. What that would tell us is that, as well as the Fed being increasingly surprised by how sticky inflation is over the course of the rate hike cycle, which is almost a year old now, markets are also catching up. And in fact, if you look at the probabilities further out, markets are still expecting a pivot to rate cuts after reaching a terminal rate for the U.S., for example, of around 5.5, looking for rate cuts by the end of the year. And if you look at the history of aggressive rate hike cycles, the period of time between the last hike and the first cut is normally 6 to 9 months, not 6 to 9 weeks. So, we think in the short term, it's the short-term data on inflation, which is pushing central banks and markets higher on rates. And we think, inflation is likely to, or is proving stickier than anyone has expected.
Except in China, or at least for now. If you look at it as being kind of a counter-cyclical force at the moment, does it make it a compelling investment opportunity?
Yeah, except in China. So, look, I think that China has become, at the end of last year, so from Halloween on, the reopening trade was, you could almost have bought anything. But I think things get a little bit tougher from now. If you look at the messaging that's coming out of, the meetings this week and into next week, never forget that the government of China is more concerned with control than it is about reform or growth. And if we do get growth, there's always the risk that we have a market unfriendly resolution to what's going on with real estate in China. So, sure, a bit of a counter-cyclical balance on the inflation side, but China is a difficult market and has become increasingly difficult after the rally from the end of October.
Does that mean the broader emerging markets are also challenging at this moment?
Yeah, we think so. I mean, the rates going higher, dollar getting stronger, or not getting weaker, at least from here, is always a challenge to emerging markets. Also, idiosyncratic risks in some of the larger emerging markets, we think makes it hard to, for example, suggest a broad buy EM trade at the moment.